from Lilu's investment in Lukoil, a deep dive into a value play. Part 8. Lessons, Incentives, Fear, and Extreme Mispricing. Let's step back and strip this to first principles. The lessons from Lukoil aren't really about Russia. They're about what happens when systems fail and human behavior gets compressed under pressure. When systems break, incentives dominate intelligence. The Russian citizens selling vouchers weren't irrational. They were responding correctly to their environment. Their goal wasn't long-term optimization. Their goal was survival. Food, heat, certainty. When incentives shift from maximize future value to reduce uncertainty right now, prices detach from intrinsic value. Not slowly, instantly. Markets don't fail because people are stupid. They fail because people are constrained. Fear collapses time horizons. In normal markets, people think in years. Under stress, they think in days, sometimes hours. Voucher sellers weren't discounting future cash flows. They were discounting time itself. When time horizons collapse, long-duration assets get annihilated in price. Oil reserves are the longest-duration assets you can own. That's why the mispricing was so extreme. Extreme mispricing doesn't come from bad news. It comes from structural dysfunction. This wasn't a recession or a weak earnings cycle. It was a regime collapse plus a broken ownership mechanism. Those conditions are rare. When they occur, prices don't drift. They snap. That's why cents-on-the-dollar opportunities don't appear every cycle. They appear when systems change faster than human behavior can adapt. Margin of safety is arithmetic, not comfort. Lilu wasn't calm because he felt confident. He was calm because the math allowed him to be wrong. Buying at 1% of value means you don't need optimism. You don't need political reform. You don't even need competence. You need the asset to continue existing. That's a very low bar. Friction created the return. The custody risk, the illiquidity, the lack of transparency, those weren't obstacles. They were the source of the opportunity. If the market had been clean and accessible, the price wouldn't have been absurd. Mispricing lives where the process breaks down. The hardest part wasn't seeing value. It was trusting it when it felt irresponsible. In real time, this trade felt wrong, morally unstable, politically dangerous, financially chaotic. That's why it worked. Prices reflected fear and incentives, not reality. When fear dominates incentives, prices tell you more about psychology than assets. When that gap gets wide enough, arithmetic wins. Everything collapses into one idea. When the price is absurd, time stops being your enemy. Most investors fight time. They need growth quickly. They need narratives to stay intact. They need markets to cooperate. That's what happens when you pay a fair price, or an optimistic one. Lilu paid a price so low that time became the catalyst. He didn't need Russia to work. He didn't need reform. He didn't need good governance. He needed the world to keep using oil. That was always true. Here's the inversion most people miss. When you buy at the wrong price, time increases risk. When you buy at the right price, time removes it. As days pass, panic fades. As years pass, systems normalize. As decades pass, assets assert their utility. No prediction required. Only survival. Now the uncomfortable question. Did Lilu sell too soon? If he entered around 1994 at roughly 15 cents equivalent and held through the full commodity supercycle, the math becomes absurd. Lukoil ADRs eventually traded north of $60. That's hundreds of times the original capital. Even selling early in the low 30s would still be a 200x return. But holding isn't free. Lilu launched his fund in 1997. Almost immediately, Asia collapsed. Then Russia defaulted. Lukoil fell over 70%. A personal account can tolerate that. A fund with outside capital often can't. Liquidity needs change behavior. Reputation matters. Optionality matters. Capital is path-dependent. There's also opportunity cost. He needed capital to move on to cleaner, more durable compounding machines. And he did. After Russia, he went on to make extraordinary bets in stable systems, most notably Timberland, where mispricing came not from chaos, but from short-term thinking about a long-lived brand. That shift mattered. This is where the Nick's sleep idea collides with reality. The idea is simple: own great businesses for a very long time and let them compound. But that requires stable capital, patient partners, and freedom from forced decisions. Li Lu in the late 1990s didn't have that luxury. He was still earning the right to be patient. Selling earlier may look suboptimal on a spreadsheet, but selling allowed him to survive, to scale, and to reposition from pure Graham-style deep value into quality compounding later. In that sense, Lukoil didn't just generate returns. It funded the next phase, the phase where long holding periods actually become possible. That matters. The deeper lesson isn't never sell, it's understand what you're optimizing for. Maximum IRR, maximum absolute dollars, maximum long-term optionality. They're not the same. Lukoil wasn't about bravery or genius. It was about refusing to pay a price that demanded optimism. It was about letting arithmetic do the heavy lifting until time could take over. You don't get paid for intelligence in markets like this. You get paid for patience, earned by price discipline. When the price is merely cheap, things must go right. When the price is absurd, things just must not end. That's when time works for you. Not as a slogan, as physics, slowly, quietly, turning chaos into compounding. This is Avi. Like and subscribe. On to the next.